Welcome to Inside India. I'm Amitoj Singh, and these are your headlines at this hour. India is set to release its Q2 GDP today. Growth expected to remain resilient on strong domestic demand and an export rush ahead of tariffs. We'll also find out if that data could provide a further boost to the Indian markets, with the Nifty back at record highs. An e-commerce firm, Meesho, seeking a $5.6 billion valuation when it launches its set 600 million Indian IPO next week. All right, let's take a look at the markets. Asia-Pacific markets specifically, they're trading mixed on Friday as the U.S. stock futures stayed flat over Thanksgiving Day, leaving the Nasdaq Composite on track to possibly end a 7-month winning streak. Traders in Asia will also be passing fresh economic data, including Tokyo's inflation print, a leading indicator of Japan's broader price trends. Tokyo November core inflation was up higher than expected at 2.8% year-on-year and well above the Bank of Japan's 2% target, adding to the case of the BOJ, for the BOJ to hike in December. At this point in time in Tokyo, what you're seeing is a bit of a muted reaction, 0.04% down. You're also seeing Kospi down 1.13% now. And the Hang Seng also down 0.22%, where the focus in the city is obviously on the fire that has led to the deaths of, dozens. Now, the Indian markets, they're coming online in about 45 minutes. GIFT Nifty futures are indicating a couple of things. Investors will also be watching India's GDP for its fiscal second quarter through September later in the day. That's at 8 p.m. IST, 10:30 p.m. SGT. The Nifty 50 hit an all-time high of 26,310.45 during the session, but profit booking dragged it to 26,215 at close, up 10 points or 0.04% from the previous close. Now, the Reserve Bank of India is also expected to go ahead and cut its key rate by 25 basis points when it does make that decision on December 5th. That's what a Reuters poll is saying. How will that really impact the rupee is the key. We're watching that very closely. All right. What is going on? We're watching for India's second quarter. That's the focus. But the GDP data, will it be released later today at 8 p.m.? When it does come out, what can we expect? Economists have actually been polled by Reuters, and they estimate growth at around 7.3%, easing slightly from the 7.8% expansion recorded in the previous quarter. Though that growth could moderate in the next few quarters. Still, that would make India the fastest growing major economy. Resilient domestic demand is there, boosted by GST cuts. There's a busy festive season that one can factor in, and a rush to front load exports ahead of tariffs, all likely to support that particular data. And it's my pleasure to introduce to you Neelkant Mishra. He's the chief economist at Axis Bank, but perhaps the second hat that he wears is more important. He's also a member of the Prime Minister's Economic Council, a part-time advisor to Prime Minister Modi himself. So, sir, it's a pleasure to have you on. Thank you so much for coming on CNBC.
Thank you for having me.
I just want to start by Axis Bank first. Your forecast for Q2, obviously the Reuters poll of economists saying that India's GDP will grow in Q2 by 7.3%. What's your take?
So our forecast is slightly higher than consensus, but frankly, this is backward looking. What we are, I think, much more excited about it, what comes next. Remember that a large part of the stimulus that came in through the GST cuts would be effective after the second quarter. In fact, the second quarter was where consumption was held back in anticipation of price cuts later. Therefore, I think it is in the subsequent quarters where I think growth can be substantially higher than where consensus is right now. Our forecast for FY26, which is this fiscal year, is now above everyone else in the street on 7.2. We're also saying that once these outcomes become visible and clear, India's trend growth assumptions also need to be upgraded.
That's interesting that you say that. I just also want to get a sense from you about the IMF, because it has pushed its estimate of when India will hit the 5 trillion economy from FY 2028 all the way to FY 2029, one full year later than previously projected. What's your take on that?
So, see, when you are looking at those nominal numbers, a number of things come into the picture. The first is what is the GDP deflator? So, what we have seen this year is a substantial drop in inflation. Inflation has been much below what anyone expected, including us, which also suggests, by the way, that there is significant slack in the economy. And that's part of the reason, as you were mentioning earlier, that the RBI, the MPC is likely to cut rates again. So there is significant slack in the economy, and therefore inflation and headline inflation has been coming down. This year's nominal GDP growth is expected to be just 8% because the GDP deflator is very low. On top of that, we are seeing significant currency volatility, and so there are many such adjustments that need to be made when you are looking at that 5 trillion number. Frankly, I think what really matters is real GDP growth, and there I expect to see upgrades even for the IMF.
Okay, that's very interesting. Because you mentioned deflator, what are your views on the role of the GDP deflator lending support to those GDP growth numbers? Because I just want to quote Kaushik Das, the India chief economist at Deutsche Bank, and he told Reuters that the GDP will benefit from a lower base, what we saw in Q2 24-25, and the real GDP has been estimated to grow by 5.4% back then. And he said, and an exceptionally low deflator, which will artificially prop up real GDP growth. What's your general take on that?
Look, there is a new GDP series which is going to be published by February. So there are flaws. I think Kaushik is right. There are flaws in how the GDP deflators have been calculated. I think that even the first quarter numbers that were published were, I think, boosted by, I think, inappropriate calculation of the deflator. But that's, missing the big picture, meaning that I think going forward, and frankly, markets do not look backward because we already know September quarter results from companies. We know what momentum was there. We are also very excited about what we have seen in October and November. I think what matters really is are trend growth assumptions going to be upgraded or not? And just to give you a flavor of what I'm talking about here, India's trend growth, we think, is 7 or above. There are many people who are at 6, 6.5. In FY25, which is the last fiscal year, we had a significant 80 basis points of explicit fiscal tightening. On top of that, there was about 0.5 percentage point of off-balance sheet tightening. There was also a significant drop in the monetary impulse. So credit growth, which was 16.3% in March 24, actually fell to 12% in March 25, and then onward to 9.8% in May 25. So there was an equivalent of 2 percentage points of GDP worth of tightening that happened because credit growth slowed. The delivered GDP growth was still 6.5% despite all of that was happening. And which suggests that if the headwinds are not there, which means that if there is like 100 kilometers an hour headwind and the plane is still flying at 800 kilometers an hour, if the headwind drops, then it'll start flying at 900 kilometers an hour. And that's what I think we are going to see in the second half of this year. We are seeing credit growth revive. We are seeing the hard miles on fiscal consolidation crossed. And frankly, that's what my expectation would be, to read the tea leaves on what second quarter numbers suggest about what the road ahead is.
Since you mentioned new GDP series, are you in a position to tell us a little bit more about that? Can you give us some color on that?
See, economies which have a very large informal segment, so about 40% of India's GDP as per the last series was informal, meaning that you don't get any data on a regular basis. Every 5 to 6 years, 7 years, they rebase, they set a new base. There are comprehensive surveys done, and a new base of the GDP is created. Unfortunately, around the time of 2018-19, there were so many disruptions happening. We'd just come out of the transition to GST. There had been demonetization. And therefore, some of the surveys were found to be a bit distorted. Then we came into the COVID picture, the COVID pandemic, and the economy was again disrupted for not just the year of the pandemic, but also the years after that. So we have now seen 3 years or 2 years of good consumption expenditure data. There have been lots of enterprise surveys being done, comprehensive surveys to capture the informal economy. And the new GDP base will be launched in Feb-March. This will be, of course, rebased. So, for example, the index of industrial production, the set of factories that we are surveying, the kind of products that we are surveying. Remember, in 2012, there were only feature phones. There were no smartphones being manufactured in India, for example. And so there's been a significant change, an economy that grows at 11, 12% in nominal terms every year, effectively doubles in size in 6 years. And therefore, the nature of the economy itself changes. So there will be, I think it will become much more representative of the underlying economy than we have the series so far.
Is this possible to come in the budget by any chance?
The budget is not affected by this. Yeah, so the budget will be announced on the 1st of Feb.
Yes.
All that matters in the budget is what is the nominal GDP growth being assumed. Beyond that, the budget is not very deeply affected by.
Fair enough. I was just trying to understand when this would come out and all that. But okay, since I was talking about the IMF and its push in estimation of India's GDP, one of the things that IMF said in its report was that Indian authorities disagreed on its base case of 50% tariff not going away for a while. And in fact, what they said was that the 50% US tariffs would remain in place indefinitely and considered the staff's estimated growth impact to be on the high side. Do you see a fault in this calculation by the IMF then?
Yes, I think there are many flaws on many fronts on that. So the first is, of course, that, if say, the Russia-Ukraine war itself ends, then I think the assumption that this will be there forever is, you would understand, it's quite a bit of an exaggeration. The second is that there is progress being made. You can see, all the soft signals that, purchases of Russian crude have come down. India and US have signed a gas purchase agreement. There have been weapons agreements being signed. All large American companies are doubling down on India as a counterweight to how they compete against the Chinese. Things as diverse as semiconductors and cars, and you're seeing or even artificial intelligence, and you're seeing Google announcing a $15 billion data center in Andhra Pradesh. So the companies we are seeing all the signs that the break is not strategic, not structural, and if it's not, then these tariffs are not going to last very long. More importantly, the impact of these on India, I think, is exaggerated. So we are already seeing that the non-tariff barriers that existed in Europe, Japan, and other shrimp export markets, for example, have now started coming down. And so shrimp exports are now starting to rise again. We are starting to see apparel companies, finding routes around it. About more than half of India's exports to the US are actually exempt. So you saw in October, despite 50% duties, that the exports to the US were down only 9%. I would be far more worried about what China's dumping in other markets is doing to Indian exports, which is a strategic concern, which is frankly a concern that the US should share as well. That India's exports were falling. I think that because in India's export markets, there is significant dumping from China happening. So those would be things that I'm far more worried about. In fact, even on services, you'll see in the month of September, the last month for which we have data, services exports on aggregate in dollar terms grew at 13% year on year. And this was despite the fact that some of the physical services like tourism and transport related to freight or insurance, they've been quite weak, and they've only started picking up in October, November. The modern services, which is business services, IT services, the financial services, these have actually most likely been growing in the high teens, if not 20%. So despite all of this drama around H-1B visas and this and that, the American firms continue to buy significant amount of services and are still significantly increasing their presence in India. So I think the IMF is wrong on multiple fronts.
Very interesting answer, sir. I have a couple of questions for you. So we'll try to get this quickly done because we're running out of time. One is, what is stopping the tariff deal from being announced? Because every indicator is that the negotiations have happened. The feeling was that by Thanksgiving we'll have a result. And I'm not asking you necessarily to wear any political hat. I'm asking you to wear the economist hat. So I just want to get a sense from you about, is there a red line on tariffs? What is really going on? Why aren't we hearing a deal's announcement?
Yeah, so I know as much as you do, perhaps less, because I've not been really tracking the the news flow on this one. I think it is. See, if something is inevitable, it'll happen. I know it is. It is. The sooner it happens, the better for all of us. My understanding is that this current U.S. regime, the trade discussions happen in a very different way from what the whole global establishment has been used to. It generally, the politicians are involved, of course, but they're involved in the background. It is the bureaucrats who do the hard negotiations, and then once the deal is signed or agreed upon, then the leaders turn up to sign. With the current U.S. president, he wants to be involved in the last mile of discussions and negotiations, and I think there could be scheduling conflicts. There could be some things minor points which I think both sides need to completely agree on before it happens. But I'm with you that my understanding also is it's almost done, and it would be a matter of weeks, not months.
And is there any information, because in the absence of official statements, there's this thought that H-1B might be an issue. That's a negotiation thing. There's also the red line on agriculture that has been mentioned. Are you hearing anything?
See, H-1B, I'm not sure is that big an issue. I mean, and here I'm being I have no idea of what is being discussed. I'm just seeing from the perspective of economic salience that, a large number of H-1Bs are now used by American firms. So if they have a problem, if it stops or slows abruptly, they have a bigger problem. Indian firms are, 78% of Infosys volumes, for example, are delivered offshore from India. And more than 3/4 of on-site employees are actually locals. So I don't think H-1B is that big an issue. Agriculture could be an issue because I think that's a very sensitive matter when it comes to dairy and corn and all that. But we have been discussing this for a while, so I'm assuming that there's been some sort of closing of.
If you wear the economist hat, you made it very clear that you don't understand why India has a red line around agriculture. I understand that, so I won't get into that. About the RBI rate cut that is predicting, economists are predicting it next Friday. If the GDP is accelerating, then is there a need for the RBI to cut rates at this time, in your view? And you also have had the IMF, talk about how this could potentially impact India's management of the rupee, the RBI's management of the rupee from crore-like. Now it's reclassified it to crore-like. So I just want to get your sense on all of that.
So look, when there is a prescription and there is a prediction. So my prescription would be to not cut rates. So that's our official stance. But as we start to see the slack in the economy, see, there are two ways of understanding what is needed. So IMF may be saying that growth is faster than trend, which frankly, we don't even know what trend growth is. But if you start thinking about the slack in the economy, the fact that, post-COVID, we are still below where we would have been if COVID had not happened. And on top of that, with all the fundamental shifts that have happened in say household infrastructure in villages, like access to dense energy, pakka houses, electrification, toilets, etc., there is a substantial expansion in the workforce. So a lot of women are joining the workforce. So the economic slack has actually built up. When you see core inflation in the 3 handle, core inflation ex gold and silver in the 3 handle, which is well below our 4% target, it tells you that there is significant slack in the economy. There are several other measures like median inflation, etc., which suggest that there is significant slack in the economy. So you may need to grow at above trend for several years before you close that slack, and then so that's the opportunity, and therefore it is quite possible. So while my prescription is that enough has been done, there is a fiscal stimulus underway. There is quite a bit of monetary easing that was done, which is now coming into the system. Credit growth is just about picking up. So you can hold your cuts for a while and see if further stimulus is needed. But if I'm predicting, I think the likelihood of cut is very high. I think RBI is now starting to focus on economic slack more than just trend growth. And that, I think, increases the probability of a cut. Will it affect the currency? I don't think so. The last few times we've seen monetary easing, that has not been the case. We are currently in the midst of weak oil prices, been kind of undone by the surge in gold imports and the speculative interest that exists in India as well. The hot stock market has also meant FDI repatriation, that is private equity firms selling stake and taking it back, has also picked up. But I don't see a structural reason why the rupee should weaken substantially. So I would not think it's a very important consideration when you're thinking about slack in the economy.
Okay, fascinating. Final question, sir. We have, Parliament starting, the winter session of Parliament. We've had reports around how many more reforms are coming, and we've already had so much happening with income tax, with GST, with the labor reform just a couple of days ago. There's the insolvency and bankruptcy code bill, the securities markets code bill, the atomic energy bill. There's a lot happening. Can you tell us what will happen regarding all of these, but also which reform will actually bring back private capital, which is obviously not performing as well as it should?
So let me answer that the question, which I think matters most to everyone. Our data shows, like we just compiled the data for the first half of this fiscal year, September end. Companies report balance sheets as well. In the top 200 companies, of course, aggregate capex slowed to about 5% year on year. It was very weak in March quarter, the second half of last year as well. But if you exclude telecom, because the 5G capex is mostly done, the growth was 15% year on year. And so given that 5G or the lack of 5G capex will be in the base, the underlying momentum seems quite strong on things like cement. Now, my colleagues have been writing that cement prices are weak. There's so much capacity coming in, and volume growth is still in high single digits. Steel demand is good. Steel capacity capex is happening. Power capex is the biggest driver, and I think there could be a significant acceleration in power capex going forward. So private capital is actually doing quite well. In terms of legislative changes, just remember that the laws, labor codes have been notified, but the rules will be made available only from 1st of April next year. So they're not really effective yet, but that will happen. I think the allowing private sector to do nuclear power or improving the regulation of the securities markets, all of these are important legislations. I'm far more excited by what's happening on just slashing compliances and providing or bringing down the number of offenses that carry a criminal penalty. These are substantial changes which are happening not just at the central level, but also at the state level. Our brute force search, which may not be very efficient and definitely not comprehensive, suggests that 16 Indian states this calendar year have announced 38 major reforms, some of them affecting multiple number of laws. And so the on-the-ground experience of running a business is starting to ease dramatically. So those are things which are slow burn, but very powerful when they accumulate over a period of time.
Yes, clearly the focus is on the ease of business, and we're going to have to see how it's implemented through the next couple of months. Neelkant Mishra from Axis Bank, thank you very much for coming on CNBC and Inside India. We appreciate that a lot. We're back in 2. Don't go anywhere. Welcome back. Let's get an update on the tragic fire in Hong Kong as the death toll continues to rise. CNBC's Emily Tan is in Hong Kong. Emily?
Thanks a lot, Amitaj. And the number that we are working with from authorities this morning, 94 in terms of those that have lost their lives in the Wang Fuk Court, the big fire that broke out there Wednesday. They have managed to get it under control. The search and rescue mission by the fire department is expected to be completed today. This is an 8-tower complex where 7 of the buildings engulfed in flames, and that's to do with the fact that it was wrapped in green mesh and also with highly flammable styrofoam materials that were on every single window of every single floor of the 31-story building, which caused the fire to spread so quickly. What we know is 3 people in relation to the construction company have been arrested for manslaughter, and the government has ordered now all government buildings, residential buildings that are under renovation to be inspected. We are watching as the community has come together to help those that have been displaced. 76 people are injured, including 11 firefighters, and there are still a number that remain missing. But of course, we wait on the government updates, and the rescue and search mission is expected to be completed today. Amitaj, it's back to you.
Thanks, Emily. All right, we're going to take a short break. On the other side, we're focusing a little closely into what's happening with the Indian markets. Welcome back. This is Inside India, but let's first take a look at how Asia markets are trading at this point in time. The Nikkei and the Kospi down. The Nikkei muted at 0.08%, the Kospi minus 1.27%. The Nikkei already factoring in what we are seeing is inflation data that has come in Japan, and of course we're also seeing the Hang Seng down just about 0.14% at this point in time. We're going to keep a track on this very closely. Now, e-commerce platform in India, Misha, is aiming for a valuation of $5.6 billion when it launches its IPO next week. The SoftBank-backed company plans to raise more than $600 million at the top end of its price band, which is set at 105 to 111 Indian rupees per share. The 3-day share sale begins December 3rd. Misho's shares are expected to start trading from December 10th. The e-commerce firm will use proceeds from the IPO to invest in cloud infrastructure, tech, and tech development. The offering comes amid a surge in India's IPO market, which is expected to surpass last year 20.5 billion records. Also, you're taking a look at the Indian recent IPOs from Billion Brains to Lenska to PhysicsWallah. Interesting movement out there. Now, ICICI Prudential Asset Management is reportedly set to launch its $1.2 billion IPO in the second week of December, eyeing a valuation of $12 billion. The fund house operates as a joint venture with India's ICICI Bank, holding a 51% equity stake, and the British insurer Prudential owning the rest. A subsidiary, Prudential Corporation Holdings, is set to sell up to a 10% stake in this deal. This comes after a strong year for the asset manager, which reported profits jumping nearly 30%. All right, we are counting down to the market open in India. This is how things are shaping up at this point in time. We're about 13 minutes away from that open. At this point in time, it's looking muted. Nifty 50 going ahead, flirting with a record close, but hitting the record high, going past it, but then coming back down to 26,215. You are seeing optimism around the trade deal continuing, even though announcements have not been made. The US dollar-India rupee relationship, the rupee continuing to weaken, and we are going to be seeing GDP data coming out later at 8 p.m. India time, and that will obviously have an impact going into Monday. But at this point in time, whether the RBI intervenes when it comes to the rupee and US dollar relationship, that's what's key. Now, we have Feroz Aziz, who is the joint CEO of Anand Rathi Wealth, joining us. Feroz, I really do appreciate you coming on board. There's just so much to cover when it comes to the Indian markets. I just want to first understand your general take on the Nifty 50, the market, what's going on. What's your take?
Yes, so my take, if I break it down into demand, supply, fundamentals, macros, if I say it wouldn't be too optimistic for me to say that we will scale new heights in this financial year. 28,000 Nifty levels we've been talking from 22,000, which is touched on the Liberation Day in the early financial year. So I think that's intact. That gets more solidified. That's point one. Point two, if I have to substantiate why that target becomes simpler now, is because if you look at how every large player is positioned. If you look at FIIs, they're net short 88% in index futures. They've already sold 1.5 lakh crores in this calendar year. DIIs are sitting on immense amount of cash. 7 lakh crores is already bought. They're getting almost about 40,000 crores, 50,000 crores every month. You see that the earnings of the second quarter have been good. The Nifty earnings of 1,056 seem very likely now. 1,070 is the base for the last financial year on the current constituents of Nifty. So you see earnings doing okay. You look at liquidity, you're doing okay. The macro, if you look at GDP data, surprised us with 7.8, 6.8 for the year, looks intact. Inflation has been revised downwards and so on and so forth. So I personally think Nifty, which is the headline number, which is the largest index covering 2/3 of the Indian capital markets in terms of market cap, free float market cap, is set to scale new heights.
Okay, I just want to understand this because you said a couple of months ago, you said that about the Nifty, every fall will be bought into. Has anything changed around that statement?
No, Amitosh. I personally think that statement is so far valid. It becomes valid. How we see whether it will be bought into or sold into depends on what have people currently positioned themselves as. See, how we gauge the sentiment domestically is to try and very microscopically look at the small cap funds outflows and inflows on a daily basis. We algorithmically calculate all the small cap funds in India. Did they get money yesterday or they lost money yesterday? Because first, the sentiment, domestic sentiments, when it turned negative, the first barometer for that lead indicator is small cap outflows. Once the small cap outflows happen, then you need to be vigilant because that could be a start of a unwinding cycle. So that has not happened. Last 32 trading days, small caps have got a positive, and that's almost at a peak of the average you collect in a month. So that's why I would say most of the falls will be bought into, at least domestically. The second thing which you ideally would want to check is the top 5 brokers in India and their margin funding book. How leveraged is the retail India? The leverage is very low. If peak is 100, we are at 32 today. This is approximation. So you are not at the peak of leverage in the retail segment. You see the small cap index is still 9% away from the peak. And Nifty has almost traced the peak, like you rightly pointed out. So all these put together, I think the gravity of the market is upwards. Having said which, my disclaimer is markets always fall 5, 7, 8, 10%. Those are things which are business as usual, because that's what it has done for the last 25 years. Every year it has fallen 15%. Median fall. So don't be surprised if I'm wrong momentarily and if the market's correct 5, 7, 8%. That's not what I'm talking about. I'm speaking about the gravity of the market being up, and I think that I can say with reasonable significance, statistical.
That's a fantastic rider. I'm going to have to learn that one. Thanks so much for that. About discretionary fund managers, which you've spoken about in the past, that they have pulled out money. When will they bring it back?
So what I personally think is, now if you look at us, as soon as sentiment levels gets crossed, most of the international brokers start giving targets. Now yesterday I was on some television channel and they read out 6, 7 brokers giving 30,000 target on Nifty, 31,000, 29,000. So generally FIIs, which are the discretionary FIIs, bring in money little fag end of the bullishness. So I personally think that in the next 2-3 months, FII outflows will turn into marginal inflows. And FIIs have shown a very clear behavior that they are price inelastic. When they bring in money, they're so price inelastic. If they take out money, they're absolutely agnostic to price. So if that were to happen, that the tide turns, if I'm right, then I think there is some degree of upside left. So to answer your question, I think by this financial year end, you will start seeing green in the flow charts of flow numbers of FIIs, especially the active, not the passive FIIs.
Oh, fascinating. Okay, what sectors, in your view, are overbought in India? I know you're very positive on the banking side, but if you think about other sectors, which sectors are overbought? Which ones would you stay away from right now, and vice versa?
See, I think defense is overbought, clearly. Okay, of course, defense is not at its peak. Defense as a sector has very low free float and very frothy ownership. How do you check a sector's frothy ownership? Is when the markets go down, if the beta is high. For example, on a day when the markets fall 2%, you have stocks falling 5, 7% in a sector. That means there's more short-term ownership. Now, for example, IT showed the dramatic opposite kind of a behavior. Markets would be down, IT would stay flat for the last 3-4 months. And now you see the IT has started picking up. So what happens is whenever sentiment goes away, most of these frothy guys, which are owners for 6 months, 3 months, get wiped out. So I think defense, one clear space where I still see at least 15% of the free float owned by those guys who buy price, not the business.
Okay, very interesting. That's about defense. Any other sector that you'd like to highlight? Because you have been positive about banking, and you've also been reasonably positive, if I'm not wrong, about pharma.
Yes, if I look at it, I've made an acronym for ease of remembrance, A, B, C, D, and E. But yeah, I'll not bore you with all those alphabets. A is for automobile, and I think the tide has turned for automobile. We were a little early to say that. We were early enough to seem wrong. B is banking. Banking, I personally think, is something which is still 1 sigma lower than the mean valuation. In a market which is at peak, it's difficult to find the sector which represents 31% of Nifty or 32% of Nifty at 1 sigma lower than its mean valuation and almost about half a sigma lower than its median valuation. So I think banking, automobile, and consumption would be the sectors or themes which one could play.
Very interesting. Which is the next banking sector then?
Which is the next banking sector? I would definitely say consumption from a standpoint of its valuation. See, consumption in India has been propelled by 3-4 things which have still not played out. More direct taxes have been cut, indirect taxes have been cut, taxation has become relaxed in terms of investing taxation also has become relaxed in the unlisted space. So all this positive sentiment and more money in the hands has still not played out in the form of consumption, especially rural consumption.
Okay, so then what's your 2026 Nifty 50 target? And give me the specific number with decibels.
Okay. So you sure hell bent to prove me wrong the next year, but yeah, I'll try and give you some tolerance to that. So I personally think this financial year, which we can see, is about 27,000 to 28,000 is very likely on Nifty.
Okay.
That is March
That's
26.
Yeah, that's March 26. Okay. Let's just talk a little bit about the IPO fever. We brought up a couple of things just a short while back. We brought up Misho, Lenskart has happened, Billion Brains has happened. There's a lot of frenzy around IPOs, right? But can you talk to us about uneven returns? And I want to quote something because what we've seen is the BSE gauge of newly listed firms tracking companies for a year after debut has actually found that the broader market is on course for its first underperformance since 2022. About 40% of the 108 firms in the IPO index trading below their offer price, with a dozen down more than 25%. This is a reportage by Bloomberg. How do you view this? Because given that everyone's investing in IPOs and domestic investors are, just going there like it's a party, really.
Yeah, absolutely. See, IPOs is a different ballgame. I don't even consider that as listed space because the behavior of the owner is very different. I remember when we got listed, the bell ringing ceremony, I did a half an hour speech or 20-minute speech, came down and realized that the amount of shares traded was greater than the free float we had given in the market. So I personally, then I started analyzing most of the IPOs have a 2 times the volume on the first day. So traders, especially retailers in India, are using IPO as a 1-day listing gain or at best a week's listing gain. So what it behaves for the first 1 week is very different and subsequent can be very different. And you have certain kinds of promoters, certain kind of industries capitalizing on the valuation frenzy. So if you go bottom up, very microscopically, you will be able to find a IPO which got listed 10 days back and figure out which ones are the most stable ones. Any institutional buying after 10, 12 days of its listing is a great sign that that will be one of those positives, not in the data which you said, which is negative.
Okay, but long term, you're positive about the idea that IPOs are happening and etc.
I'm very hopeful they happen. Why? Because today you see the 500th company in India, which is as per free float, is only $500 million, and India has a household savings of 100 lakh crores. I don't know how to say it in dollars, but that's 100 lakh crores. 1,000 lakh crores is what is India's household savings, 1,000 lakh crores, and only 6% is in equity. So a company with 500 in NSE 500 being $500 million, there's no good paper. So if India has to invest 20% of its household savings in equity, like most global peers have done, you would require such good quality paper coming into the market. Otherwise, there'll be bubbles, which will definitely hurt the long-term fabric of the capital market. So I'm very hopeful that valuations are reasonable. That's my prayer to everybody who lists the business. In fact, I promote people, family businesses, to get professional and get listed so that people can participate in their equity.
Okay, so you're hopeful but not optimistic. That's interesting to note. Okay, final question for you. Your call on the GDP preview, because we do know that GDP data is coming out later today, 8 p.m. India time. And what is your call subsequently for next week's Friday monetary policy decision on the RBI rate cut?
Yes, so I think we might just get a little more surprise, like the last time. Last time the number was 7.8. We have the year at 6.8 needed. I think I would opt for at least a 40-50 basis more than the expected GDP. Then coming to monetary policy, I don't think this monetary policy will leave too much headroom in terms of rate from 5.5, which is the repo. I don't see that happening now, but is RBI very comfortable doing that? I think so, yes. But my vote would be they won't exercise that comfort right which they possess today.
All right. Feroz Aziz from Anand Rathi Wealth, thanks so much for joining us. Much appreciated. All right. The market in Mumbai just getting warmed up. We're back in 2. Don't go anywhere. Welcome back. Indian markets are online now. The Nifty 50 muted start is what we have seen. Remember, GIFT Nifty futures indicated that 26,206 at this point in time. The US dollar to the Indian rupee relationship, rupee continuing to weaken, but it's all about volatility for the RBI, the Central Bank of India, and not necessarily about intervening is the official stance, but we've heard traders talk about how there has been intervention. What is playing on the minds of traders in the Indian markets? Well, a couple of things. You have the GDP data later today at 8 p.m., but you also have the optimism around the RBI rate cut and the Fed rate cut. Okay, let's take a look at some of the movers in the Indian markets today. There you go. Tata Consultancy, TCS, has signed a 5-year partnership with SAP to accelerate enterprise-wide cloud and generative AI transformation. The deal will see TCS streamline SAP's IT systems, enhance AI-driven capabilities, and improve operational efficiency. The shares up 0.16%. Mahindra has also launched a new 7-seater electric SUV, the XUV 9S, priced at around 2 million Indian billions rupees. That would be obviously. That's roughly over 22,000 US dollars as part of its electric vehicle push. Mahindra will invest an additional 20 billion Indian rupees in the XUV 9s and a new edition of electric SUV, the BE6. This contributes to a total planned investment of 160 billion Indian rupees through fiscal year 2027 to develop electric SUVs. Big push there. Mahindra and Mahindra up 1.22% actually, rising quite heavily actually. All right. The leaderboard of the biggest cities in the world has had a shake-up recently. Travel and transport reporter Monica Petrelli is right here with me in the CNBC studios in Singapore. Monica, India is bursting at the seams. The cities are bursting. What bad news do we have?
Well, it's not bad news, but with nearly 42 million people, Jakarta now said to be the world's biggest city in terms of population. This is according to a new report from the UN Department of Economics and Social Affairs, which says it's changing the way that it counts city populations around the world in a way that makes it easier to compare country to country. Now, after Jakarta, Dhaka in second position, followed by Tokyo, then New Delhi and Shanghai, the Indian city of Kolkata, also on the list at number 9 after Manila, but ahead of Seoul. And 9 out of the 10 most populous cities in Asia, or 9 out of the 10 cities here are in Asia, and this is a fact that the UN says will hold through 2050, when it expects that Dhaka will actually jump to the number 1 spot, and knocking Seoul there off the list. Now, this report also saying the world becoming increasingly more urban, saying more cities are popping up around the globe, but also those big mega cities. These are cities with more than 10 million people. These are growing in number from 8 back in 1975 to 33 today. India is home to 5 of those, and soon to be a 6th. The UN says that the Indian city of Hajipur will be next to become a megacity.
Yeah, makes sense. It's right next to the capital of the eastern state of Bihar, Patna, and it often happens that these towns next to capitals and big cities become the next big thing, and that's what we're seeing. Monica Petrelli, thanks so much for joining us. All right. Now, we also talk about AI and robotics. Monica and I do often, all the time here on CNBC, but Squawk Box's Cherry Kang has also been speaking about the topic to perhaps an unlikely source. Cherry, take it away.
Yeah, maybe that is a good sign. That is a bullish sign, Amitoj, for the whole AI narrative that I am actually finding a lot of AI technology conversations in the entertainment industry in none other than South Korea. So I had a chance to sit down with the CEO of Galaxy Corporation. Now, this is a company that is touting itself as tech and really just trying to really blend entertainment with the technology, and very famously signing on high-profile clients like singer G-Dragon of Big Bang as well. And this is a company that actually has its roots in, remember, metaverse, definitely a concept that took off during COVID-19 pandemic. So I actually first started asking him about whether he thinks COVID-19 style of consuming entertainment, everything virtual, is going to stay with us. Take a listen to my conversation with Schofield Cho of Galaxy Corporation.
저는 당연하게
I definitely think it will continue.
I think the success of K-pop Demon Hunters is a prime example. Because of the COVID-19 pandemic, the desire for more contact did grow, but the world got to experience remote as well. Both the in-person and the virtual worlds exist. The world has experience with both. And K-pop Demon Hunters' success shows a project that has good fundamentals such as good music and convincing storytelling can be successful, even if it's done virtually.
What is the impact of artificial intelligence on the industry itself, K-entertainment industry, and your company? Do you feel like you're better positioned for AI?
저희 회사 같은 경우는 최근에
When Microsoft CEO Satya Nadella recently came to Korea, we revealed a music video on G-Dragon's song Home Sweet Home, which was the world's first music video created by AI Sora. Now the industry will be divided into before and after AI. We cannot create music videos for every single song out there, but in my view, most music videos will be created by artificial intelligence except for lead singles or title tracks. Costs will come down and efficiency will go up. A new music video industry and copyrights industry will be created with the help of AI.
Talk to us about your worldview of how robots can actually fit into this whole entertainment industry. Do you think about that?
Yeah, 저는 이제 너무 이런 로봇이나 AI는
Yes, I do. I take a lot of interest in robotics and AI. And what I've learned so far is that robots is next. We have physical idols and the virtual world. Now, the next phase is robots. The three coexist, and I think the coexistence will happen in the next 5 years. Galaxy Corporation is preparing a lot for that day.
And we'll perhaps find out what the market truly thinks about all these enter-tech narratives that the company is going for. Currently, it's garnering about 1 trillion Korean won worth of valuation, so definitely a unicorn in the Korean standard, and the company is eyeing an IPO next year. Amitoj?
Fascinating developments in music production, in music videos. Is there more that we can look forward to related to K-pop, for example?
Exactly. I mean, bring it on. And he did mention, right, K-pop Demon Hunters. And I think this is going to be really the new way for the young people out there that I don't really get, but consuming entertainment, pop music and drama and movies in a virtual and robotic way. Things are changing, Amitoj, and we got to sort of catch on.
Yeah, I don't know if I can do that. I'm going to try. I'm going to try. Okay. Speaking of the K-pop sensations, thousands of spectators lined Manhattan streets on Thanksgiving Day to watch the 99th Macy's Thanksgiving Day Parade. The holiday tradition features balloons and elaborate floats of popular characters, including Dora, the Explorer, SpongeBob, SquarePants, and Spider-Man. And of course, Huntrix from the K-pop Demon Hunters capping the parade, an appearance from Santa Claus himself. Meantime, Friday, of course, marks the unofficial start of the US holiday shopping season known as Black Friday. We're going to leave it there. Happy shopping.
shining.